You're listening to Sound Money from Casey Research.
Hello and welcome to the show with me, Andy Duncan, in London. Today, coming to us from Rapperswil in St. Gallen Canton, my special guest is Claudio Gras, the Managing Director of Global Gold based in Switzerland. On today's show, we'll be discussing the flows of precious metal from west to east, the likelihood of an upcoming global monetary collapse, and the chances of a global return to some form of gold monetary standard, whether public or private. Grüß Gott, Claudio.
Grüß Gott, Andy. It's a pleasure speaking to you.
And to you as well. Now, to an ordinary observer who just watches the daily news on television, the financial crisis of 2008 seems to be finally dissipating and things seem to be getting back to a sort of fragile new normal. What do you think of this perception?
Yeah, basically, I don't believe that. I don't see any signs of recovery. What has been done, since 2008 is basically papering over the existing problems. Because from my point of view, we have a huge debt crisis, and we piled up such a gigantic amount of debts that this needs to be solved first. And you just cannot, if it would be that easy to create wealth out of the printing press, out of nothing, I mean, then we could, hand over every single person, $1 million on a monthly basis, and we all know that this is not working.
Well, they've tried it in lots of places, haven't they? The Weimar Republic and Zimbabwe. Now, we last met on a riverboat in Prague, and at that time things looked great for gold. It was heading through $1,900, $2,000 looked days away. But since then, it's crashed down to $1,200, and now we're supposed to be all excited about $1,330. If gold is the canary in the coal mine, and its rapidly rising price signals that things are going wrong for paper money, why isn't it already over $2,000, and why isn't it already probing towards $3,000 an ounce?
Yeah, I think because it's the canary in the coal mine. I mean, a rising price of gold is basically reflecting the distrust in the paper money system. So, the funny stuff we are experiencing is that in the paper price of gold, we have a bear market. And in the physical market, we have a bull market. Since the price correction, let's call it that way, middle of April last year, I mean, the physical demand has spiked tremendously. It tripled, quadrupled, depending on the area. And 70% of all the gold refining is going through Switzerland. So, and when I talk to the refineries, I mean, basically the books are filled up until 2016. And so we definitely have to ask the question, if we have, if prices are based on supply and demand, why do we have such a low price of gold versus a spiking, demand in physical?
And at what point do you think the price will flip from being a gold paper price to being a physical gold price, when all this gold that's moving to the east from the west actually starts having a really big effect on the price? When will that happen, do you think?
Well, if I would have a crystal ball, then I would be already, a multi-billionaire. But what can be said is, I think with the actual price levels, it might be hard, especially for the mining industry, if the prices are staying that low, that they might have to reduce, the capacity. Maybe some mines even are going bankrupt in the future. And so there might be a shortage in terms of mining supply, and also, people are not selling their jewelries any longer to melt them down into bars or coins, whatever. We will see definitely in the future that the paper price of gold might go the opposite way, when we will see higher premiums in the market. That the refineries are basically are going to increase their fabrication premiums because the demand is much higher than the supply. And that, of course, when it comes to the price, I mean, the mining supply is not that important, because I think, we have a stock-to-flow ratio in physical gold of about 65 years. So, when prices are rising, you will always find people selling their gold, and it will fill, the market needs then.
Now, one of the reasons why gold went down in price and it stayed down for a long time is that Western central banks have been toying for a long time with the idea of tapering and a targeted reduction of quantitative easing. But if they do that, what they might unleash is a beast of deflation, which they're terrified of. Do you think they'll actually go through with a real removal of money printing? Or is this just like the play Waiting for Godot, where the arrival of tapering and the end of paper money printing is just talked about, but never actually comes?
I think we are in a deflationary environment since 2008, and the central banks and the banking system, of course, they try to counter that by printing new money. When it comes to the velocity of money, I mean, that's the interesting part, is that what I call it velocity of money. For me, it's created in the system. And when we look at the velocity of money, then we are maybe 30% down versus 2007. So that clearly shows that all this newly created money hasn't gone into the real economy, and it has not ended up with the consumer itself. So most of the money has been going into stock market, real estate market, government bonds, and so you cannot, it will go on for a certain while. But the outcome might be either, deflation will always be fighted by the central banks, by money printing, also in the future. So the outcome will be, either one fine day we're going to see hyperinflation, or we're going to see a deflationary collapse, which has basically the same outcome at the end of the day. Fiat money will be worthless.
Now, if you follow the Austrian school, something like velocity is going to be psychological. There'll be a loss of confidence in paper money, and then people will start unloading it as fast as they can. What kind of triggers are you looking out for this change in a global loss of confidence in paper money? What are you looking at which will tell you that we're about to enter a really inflationary period?
The loss of the trust in paper money is, I think, when we look at what's happening in the Middle East, what's happening in Northern Africa, what's happening in the Far East when it comes to North Korea, and right now on the border of Europe in Ukraine. That's a kind of that's a signal, that the people are losing trust in the Western currencies, basically, the US dollars and the euro, because paper money is only it only works as long as it's accepted by the market participants. And what we can see is, with all this destabilization, is that the market is getting smaller, and they have to assure that, let's say for the Ukraine, for example, it's a currency war, And so, if the Western nations can basically get Ukraine on their board, they will have a new US dollar or euro market. And I think these are all clear signs that distrust, especially when it comes to the global currency, the US dollar, is evaporating.
Now, if you're right, and we are heading into some kind of financial meltdown as signalled by Crimea and Chinese bond failures and so on, what kind of investment and diversification advice would you give our listeners so that they can protect themselves from things like bail-ins, fallout, and other forms of financial confiscation?
I think the best way still is physical gold, and also physical silver. But you need it in the physical format, and you have to store it outside the banking system. I think that's the best way to protect yourself from these bail-ins, and from taxation, and from all the threats which are linked to potential meltdown of the actual system.
Okay, and do you see any other kind of thing people should have? I mean, should they have 100% physical gold, or should they have other things in their portfolio?
Every investor is also different. I mean, I look at gold as that's a hard currency. Gold has been money for more than 4,000 years. And it became money because the market participants decided freely that they wanted to choose gold because it has all the all the requirements which is needed to have money, and so I think we don't know when the system is going to collapse, but everyone that is basically looking at what's going on logically, and which is also interested in history. We have seen the same situation several times in the past. So the outcome was always a collapse. and whatever was left, which really had true value, was physical gold and silver.
Now, I don't know whether you realise or not, but there is actually a symposium of central bankers listening to this right now, and they're about to appoint you as World Financial Supremo. What would you do right now to sort out the world financial mess if you were put in charge of the current world financial system?
Well, I have no, at the end of the day, I believe, the actual system. I mean, the change cannot come from the top. The people, they have to understand that every individual is different, and that we should that we were born as free people, and that we should not act as rulers and slaves, and therefore why we should not accept a fiat money system where a few central banks or individuals basically can print money out of thin air, and they decide how much the money will be worth, and how much the interest rates will be, and who is going to receive the money. I think this kind of system is completely nuts. And if the people would understand that they are free, then we need free money, and that's what the people need to to understand. And as long as they don't understand it, I think a change won't be possible from the top-down approach. It needs to be a bottom-up.
Okay, so let's get a bit more future focused then. We'll assume there has been some kind of monetary collapse. The current global financial powers have lost all their power. The paper dollar has become the old maid currency of the world. What does the normal look like in the future? What's the new normal once the system has collapsed and then recovered?
I don't know. I really don't know. The question is, when this system is going to collapse, what we are experiencing right now, with all the destabilization in the world, which is also kind of fight between the West and the East, and we have seen that all the gold basically already has been moved from the West to the East for the last at least 14 years, even 20 years. There has been a tremendous shift of wealth from the Western world into the Eastern world. And now we see that the potential, the threat with the Ukraine, for example, it's really a kind of balance of power game. And we have experienced the same situation, before the First World War, when we had, the British Empire, and they always followed this balance of power doctrine when it comes to Europe. So they were always saying we have to support the second strongest in Europe, so that we can keep the balance of power. And I think this is now what we're seeing actually. So we even had, when we look into history, two parallels that we had two huge reflationary periods, and they were from 1897 to 1914, and the second one was from 1933 to 1939. So we had it before the First and the Second World War. I think at the end of the day, most likely in the future, it will be really harsh, because it's not just collapsing. So the question is, what are the people making out of it? Are they now taking the next few years, and will they understand that the actual system is not the system people should look for, that the government cannot protect them, that the government cannot give anything for free, and that that we should live in a kind of like a system as Switzerland, which still has a decentralized political system with federalistic structures, which is basically limiting the power of the politicians, and therefore is coming much closer to a natural order than any other central state on this planet.
Switzerland managed to secede from the Holy Roman Empire. Do you think that might happen to the countries of Europe seceding from the EU and other parts of the world where countries secede from the unions they're in?
From a historical perspective, what we have seen is, we had a feudalistic system in the past, and then, with the First World War, it was basically, transferred into a nationalistic democratic system, and then, the next step was an ideological system in the Second World War. communism, fascism, all that kind of stuff. And now what we can experience when it comes to the European Union, or other countries, let's focus on the European Union. It's going back, towards nationalism. I mean, we can see, secession in Spain. We have Barcelona, which is basically interested. We have the Basque, which are interested to secede. We have the Scots, who want to have their independency. We even heard about Bayern in Germany, that there would be an interest. So, I mean, we have it in Italy, northern Italian part. So we can see everywhere the signs that the European Union is not that strong, not such a strong union any longer, because the people are just, they don't like it. They don't like that a few bureaucrats in Brussels are deciding what they have to do, what they have to eat, how they have to behave. And so therefore, I see a clear return when it comes, in terms of, when I look at it from a historical perspective.
I just have a couple of financial questions for you. Let's say we get to a new normal in the future and gold is backing the world's money. How many current dollars do you think an ounce of gold is going to get to?
I don't know. I mean, I haven't checked the actual figures. I mean, I think, when we look back into the Weimar Republic, end of the 20s, an ounce of gold. I mean, we are talking about, when the system is crashing, we're going to see, social unrest. We might see, war, and and we'll see the crash of all the paper currencies. And then basically in that transition period, you might be able still, to buy a house, a villa in Berlin for an ounce of gold, as it was possible back in the 20s. So I really, gold will be then, at that time, gold will be the king. And it will, it's protecting the wealth, it's the hedge against all this artificial wealth in the actual system. And it will allow everyone, who has physical gold to restart and then basically to have a better life and a new start. So, but I cannot say how much, I mean, we should not anyway. I mean, to say that gold in dollars is that much, I mean, it's, forget about US dollars, forget about euros, an ounce of gold is, we've used the wrong measurement criteria in terms of paper money.
Okay,
so,
I've just got one last question for you. Now, I hate to ask the managing director of a company called Global Gold, but I'm going to do it anyway. What do you think about Bitcoin?
Bitcoin is, whatever currency is going to compete with the actual system, because people freely want to, they freely decide what they want to use as currency. Of course, then, there are people out there, they like Bitcoins. I mean, then they should go for it. I personally believe I would not invest in Bitcoins, personally. Because, I mean, we have one Bitcoin, we have seen already 3 or 4 different ones, new ones are coming. So at the end of the day, even if they are saying that it's limited, with all different kind of new Bitcoins, I think you're going to reach in the future, not an exponential growth, but, I mean, it's just going to be to increase. And then you have also kind of money printed out of thin air. But actually, during right now and for the next few years, I think it's reasonable. And if people want to go into Bitcoins, of course, that's the free choice.
And free money is the thing there, isn't it? But there is only one element, AU, for gold. Now, it's been great speaking to you again, Claudio. Where's the best place our listeners can find out more about you and Global Gold?
You can go on the www.globalgold.ch. And we also, I mean, we are publishing a quarterly outlook report, because, I believe in, what Thomas Jefferson said, the educate and inform the whole mass of the people. And they are the only sure reliance for the preservation of our liberty. And so in this Global Gold Outlook report, we are talking about what's going on in the gold market, but we have also articles about the Austrian School of Economics. And we have book summaries of, historical books, which trying to explain, what happened in the past. and it's definitely not coming from a mainstream or propaganda perspective, but it's coming from sources which I have chosen. Most of them are somehow linked with the Mises Institute in the United States. So really to make sure that we have accurate and good books to work on.
Well, I always love anyone who promotes the Austrian school. Thank you very much for your time today, Claudio Gras.
Thank you very much, Andy. All the best.
You can subscribe to Sound Money on iTunes or sign up to our subscription service at soundmoneyshow.com, where you can also listen to our growing catalogue of podcasts, which include interviews with some of the most famous speakers on money in the world. These include Jim Rogers, Doug Casey, Rick Rule and Mark Farber. A special thank you today to Claudio Gras for joining us on the show, and thank you too very much for listening. Until next time, goodbye.